My next guest is going to tell us some market hotspots. We've got John Stephenson. He is the Senior Vice President and Portfolio Manager at First Asset Investment Management. He is also the author of The Little Book of Commodity Investing. John Stephenson, good to have you with us on Bloomberg. So corn prices, they go up, they go down. There's a lot of volatility in the market. What is the real story if we just want to look at supply and demand? Is there enough supply out there to meet the demand of emerging economies such as China?
Well, I really don't think so. And I think in general, if you look at corn or really any agricultural commodity, whether it be wheat or soybean, the real story of price and real price action occurs in the second half of the year. Because keep in mind that generally, at least in this hemisphere, we're planting around this time of the year and we're harvesting in the fall. And so it's only in the fall when we know how good our harvest was. So right now, the betting essentially reflects the best expectations of the future.
Now, John, we've had floods and extreme weather conditions in the Midwest of the United States. What's that going to do to farmers' ability to plant their corn?
Well, they should have already planted their corn already by now. But the reality is they can stretch the season out to the end of this month. But beyond that, they risk frost. And they're roughly 84, 85% done right now. So, it's definitely going to be a lighter season than anticipated, at least by the USDA in their May 9th report, where they optimistically predicted 92 million plus acres dedicated to corn production. And it looks like it'll be much closer to 87, 88 million acres.
So would you be betting on higher corn as well as higher soybean prices?
Absolutely. I think really why you want to bet on it is at least for corn, the United States is the market. It's 65% of the export market of the world. So what happens in the lower 48, particularly in the Corn Belt, is all that matters to betting in this market. Wheat and soybean, a little bit different because they're more global markets. But for corn, it's moving higher in the second half of the year. And that's extremely good for nitrogen-based fertilizers because corn is an absolute nitrogen hog.
But having said that, John, if farmers have already planted the corn, is it likely that they're going to need any more fertilizer? They're already paid for that.
Yeah, that's a very good point. They will probably need it because likely since they're planting so late and the fields have been flooded, many of them are partially submerged, they're going to have to reapply nitrogen. So their buying will have to increase throughout the year, so that's a positive for fertilizer companies. And then keep in mind when they're going to be buying again will be in the fall of this year, and that will be likely when corn prices are much higher, and they're going to be making their judgments based on higher farm receipts that they in fact need more fertilizer based on this year's experience.
John, are higher corn prices pulling more farmers away from other crops to plant corn? Eventually, won't that supply meet up with demand?
Yeah, eventually it will. I think it is a situation that's somewhat temporary. But I think, as you pointed out, China's stocks are quite a bit lower. They're roughly a quarter of what they've been in the past. So they're definitely going to be an importer, or look like they'll be an importer this season. Farm cash margins per acre are 6 times the 5-year average for corn, 4 times the 5-year times for cotton. So this is why farmers are rushing to plant corn. Soybeans are not nearly as attractive as corn on a margin basis in America.
John, some other agriculture commodities such as cotton, we've spoken about this in the past, cotton prices increasing. That hurt companies such as Gap. They talked about increases in apparel prices. Is that likely to continue?
Yeah, I think basically what we're seeing is cotton and the fibers will increase. We have a limited amount of land in the agricultural space. And really we only have so many national parks that we can convert into farmers' fields, so we're limited. And we're really limited by the technology. There's only so far we can go in terms of commercializing these fields by using technology to our advantage. The one technology that is available is fertilization. And we went through a year or two where we really didn't apply the same amount of fertilizers as we have in the past. And that's set up what I believe will be a very strong market for both potash and nitrogen-based fertilizers for the next couple of years.
All right, so a strong market for potash, a strong market for nitrogen fertilizer. What about a market for the seed companies, companies that make the seeds that the farmers use to grow the crops?
Yeah, the whole notion that ADM and Monsanto and others have for particularly the genetically modified seeds, I think that's a very strong market. There's no question about it. Those seeds are gaining acceptance globally. Certainly in Europe, that's not the case, but within South America, certainly Monsanto is doing incredibly well. China is taking hold of this and embracing these policies. This is an area that's very attractive. Of course, Deere came out, had record numbers. I think that will continue to grow and be a profitable story and a good theme for investors. And really, their market is the rest of the world, because what has happened in America with large-scale farms is the future for China.
All right, I want to leave it there. Thank you very much, John Stephenson, joining us from First Asset Management. Coming up, left behind in the area